This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. It is Friday. It's Friday.
It's Friday. We have 3 hours of work to do.
We do.
But it is Friday. And it's a busy one.
Oh, my God. What a week. Big tech earnings. We had a Fed decision. And, drumroll please, we've got a nominee to be the next Fed chair.
As for markets on this Friday, January 30th, 2026, gold and silver suffering their biggest slide in years. Gold in decades, actually. This is the dollar rebounded after reports of Kevin Warsh's President Trump's selection to be the next Fed chair, which undercut sentiment among some investors.
Yeah, it's been an interesting trade today. U.S. stocks, they are down across the board, but gotta say, some movement just to the upside in like the last half hour. A straight line up when I look at the S&P, Dow, and the NASDAQ 100. We're going to get into it. We should point out that stocks on track for their best month since October. So it's the week overall, it's the month overall that we really need to look at.
Okay, 1.4% to the upside on the S&P 500 for the month as of now. VanEck is going to be stopping by. He's going to talk about the slide in gold and silver. And oh yeah, what you need to know about Kevin Warsh.
Yeah, we're all over that, folks, including President's comments on that and Senator Tom Tillis's comments on that. Plus, we're going to get to the core of Apple's quarterly results and Tesla's possible merger move.
Yeah, and this is a wild headline.
It's an exclusive by Bloomberg. It's some great stuff. We're also going to talk insurance with the CFO of Aon. Lots to come over the next 60 minutes. First up, though, a check on that trade on this Friday. Here's Charlie Pellet.
Thank you very much. We are on track for a winning week, believe it or not, but a lot of red on the screen today. Yes, off session lows for the week, by the way, looking at an advance on the S&P of just about 0.4%. So the Dow, the S&P, NASDAQ, all in the red, but I'm going to begin with metals. What a move there. The dollar surge toward its best day since July is accelerating a plunge in precious metals as President Trump announces his pick for the Fed's top job, Kevin Warsh. Right now, I've got spot gold down 8.8%, have been down as much as 11%, the number you care about, 49.04 where we stand on gold. Silver, what a story there, down now by 27.4%. Silver at 83.68 on silver. Got to keep in mind, by the way, with that gold quote, I said 49.04. Yesterday, it kissed 5,500. Right now, stocks lower. S&P down 29, 69.40, drop there of 0.4%. The Dow down 248, down 0.5. NASDAQ down 175, drop there of 0.7%. The Russell 2000 index of small cap shares down 1.3%. Your 10-year 4.23%. The 2-year 3.52%. Gold down 9%. Silver down 28.3%. And West Texas Intermediate crude down 9/10, 64.83 right now. That is a drop on WTI 0.9%, 64.82. Bitcoin down 0.5%, 83,950 on Bitcoin. Earnings news, Apple shares, they are down by 0.3%, and shares of SanDisk higher by 8.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's get to it. The president nominating Kevin Warsh to be the next Fed chair, saying on social media earlier this morning, I should point out Bloomberg, though, was out last night.
Oh, we knew last night.
If
you read the stories on the terminal.
We knew. And then President Trump following us up, saying early this morning on social, I have known Kevin for a long period of time. I have no doubt that he will go down as one of the great Fed chairmen, maybe the best. On top of everything else, he's central casting, and he will never let you down. All right, that was on social early this morning. And then the president also talking about Kevin Warsh from the Oval Office just about 2 hours ago.
We just named a new Fed chairman today. You know that? He's a central casting. I want to keep it nice and pure, but he certainly wants to cut rates. This was the perfect candidate. This was not a surprise or anything. This was the man that's most qualified. Top student, best schools, everything was like perfect. Youngest person ever to serve on the Fed. Got the whole package. Looks don't mean anything, but he's got the look, right? Roger, looks don't mean anything, but if they have the look, it's okay. But he's got the whole package, and I think he's going to do a great job.
All right, of course, President Trump in the Oval Office just about a couple of hours ago. I should point out that the president went on to add that Kevin Warsh didn't commit, though, to cutting interest rates. All right, that's going on, Tim. And then we've got another important commentary, if you will, on this individual, but really about appointing the next Fed chair.
Well, because he's not the next Fed chair at this point. He's the nominee.
Yeah.
Senate confirmation, not a guarantee. Republican Senator Thom Tillis digging in his heels, reiterating his intention to block Kevin Warsh from becoming Fed chair until a criminal investigation into renovations at the Fed is stopped, despite his belief that the president's nomination is a good one. He joined Bloomberg Surveillance earlier this morning.
We all need to understand we still have a working quorum of members. Whether or not they have an acting chair is a decision of the president, and I assume the Treasury Secretary and others can look at. But this is all about sending a signal to the markets and to the business community that Fed independence is critically important. And going after the chair, I think, took a stool out of the foundation of people's confidence, or a leg out of the stool. Warsh is a good independent. He's got an extraordinary reputation in a community of economists and people focused on the Fed.
All right, that's Republican Senator Thom Tillis earlier today on Bloomberg. Now, asked last night if a Fed chair nominee could be confirmed without Tillis, Senate Majority Leader John Thune said probably not.
With more on Kevin Warsh, Bloomberg TV and Radio international economics and policy correspondent Michael McKee joins us here in the Bloomberg Businessweek studio. He served on the Fed's Board of Governors during the financial crisis. He's advised President Trump on his economic policy. In the past, he's been a hawk. What do we know about Kevin Warsh in 2026?
Well, we know he's straight out of central casting.
We've heard that a couple times from the president.
The most important thing. But you remember the president chose Jay Powell because Janet Yellen was too short and didn't look like a central banker.
This matters to the president.
This matters to the president. I mean, why would you bring it up? Anyway, Kevin Warsh does have the monetary policy background, and he's got a good Wall Street background, so he's well known there because, of course, he started at Morgan Stanley before he went to the White House for George W. Bush, and then he's been working for Duquesne for Stan Druckenmiller for 15 years now. So he is well known, and People. He has put it this way: he's very qualified. Now the issue is, how does he get the things done that he has always thought needed to be done because Donald Trump put him up? In other words, Warsh has been a hawk, but he has also argued that inflation is the number one issue for the Fed. They've got to keep inflation down, and now he's sort of adopted the argument that Chris Waller's been using, that AI, business investment, deregulation, going to make the economy grow faster with lower inflation, and therefore you can have lower interest rates. But how much of this is going to be seen as doing the president's bidding, and how much of it is going to be seen as Warshonomics, as somebody put it today? We're going to have to wait and see how he's able to sell this in public.
Well, let's go to that AI argument, Mike. Is that right? Or do we know yet that it's going to be? Okay.
But in theory, it should be. We saw this with the PC revolution in the 1990s. Productivity went way up, inflation went way down, and we could certainly repeat that. We just don't know how long it's going to take. There's a lot of AI out there, and it's being adopted more quickly than the PCs, and electricity took 50 years. But the question is not so much that everybody's using it, but everybody has to figure out how to use it to really increase productivity and to save money. And so that's the part nobody quite knows yet. The other converse side of that is, if we don't need you because AI can do your job,
right,
then what happens to society? And that's another big issue.
You know, I want to go back to what Thom Tillis said, Republican senator who's an integral part of making sure that whoever is nominated becomes Fed chair or doesn't become Fed chair on the Senate Banking Committee. Does he actually make it through?
Oh, I think he makes it through.
But without Thom Tillis' support?
I think he'll get Thom Tillis' support.
Which would be as a result of the DOJ dropping its investigation into Jay Powell.
Yes. Now, who's investigating Jay Powell? Judge Janine, the TV judge that Trump appointed as U.S. attorney in the District of Columbia. And what did she do? She issued a subpoena for records of the Fed's buildings. She hasn't yet, as far as we know, gone to a grand jury. She hasn't sought an indictment. There are many ways they could easily say, okay, we looked at this and it wasn't a crime. The president can still say, as he did today, that somebody made a profit off this is really bad management or whatever, and they can drop this before it becomes an obstacle to Warsh's getting through.
We want to bring Katy Kaminski in, but before we do that, go to some of the things that Kevin Warsh, right, as when he was at the Fed, as a Fed governor, reluctant at times, right, to cut rates.
Yes.
Now argues the Fed should reduce the size of the balance sheet, and he advocates changing how the Fed thinks about inflation and forecasts. So those are some of the key components that will be guiding him if indeed he is the next Fed chair.
He doesn't like using short-term forecasts, and he finds it's part of the Fed communication problem. He says that every time some new indicator comes out, then you have half the Fed run out and make a speech and say they're tilting this way, and then they tilt the other way, and so he doesn't like that, and he doesn't like forward guidance either. He finds that less than useful because you get locked into something that
but you said
doesn't necessarily. Yeah, exactly.
We've all been in relationships,
and probably one of the more important things for Wall Street is what does he do about the size of the Fed's balance sheet? His argument is that QE was necessary in the great financial crisis, but then they should have stopped. Instead, they kept going, and then they did it again during COVID, and now you have this big balance sheet, and the Fed can do its job without that. There's a lot of aspects to this, but it is going to be something that Wall Street's going to be concerned about going forward.
Sit tight, Mike. We want to bring Katy Kaminski, who's been patiently waiting by. She's Chief Research Strategist, Portfolio Manager at AlphaSimplex Group, with us from a very chilly Boston, I know, because my daughter's there, and she says it's cold, like New York. Katy, what's more chilly, Boston or some of the market reception that we got around Kevin Warsh? Although I have to say, I felt like it wasn't very clear-cut in terms of the market reaction.
Actually, I mean, from our perspective, it's very, it's been a huge cross-asset sell-off day.
Yeah.
We've seen sort of such huge moves in the metals. It's sort of like this de-dollarization narrative that sort of reverted that everyone was piled into across multiple asset classes. So you're seeing correlations between asset classes spiking that normally wouldn't today. So it's actually quite a big cross-asset class day today.
So how would you characterize, if you were to just look at the entire market response, cross-asset, how would you characterize the response to this nomination?
So the interesting part is I would characterize it as the market was really waiting for more of a pedal to the metal, get lower rates, and sort of this high octane approach. And I think a more moderate candidate, ironically, has caused a sell-off in the sense of that theme that we were thinking the market's moving in that direction. But it was pretty much due for a sell-off, if you think about it. If you look particularly in the metals, I mean, that has been a extremely trendy asset class. And, so for us, it's still just sort of maybe the top of a trend that's been very extended.
Katy, what's your read on, and we had some visuals up there about Kevin Warsh and how he was passed over in 2017 when President Trump nominated Fed Chair Jay Powell, who we're assuming is going to stay on as a governor, right, after his chairmanship is over in the spring. What kind of dynamic does that create, do you think, potentially, in your view? And might it create some tension that plays out in financial markets and maybe in the Treasury trade?
I mean, I definitely think that all eyes have been on the Fed, on independence of the Fed, on disagreement, on dissents. So I think, and for us, it's been the hardest asset class to trade because it just sort of goes in one direction and then reverts because it's very unclear what all of this means. So I think my general answer would be that we're going to have more uncertainty in bond markets, so more volatility and potential for more extreme scenarios, a little bit less of a trendy environment for trading bonds, which is tricky for us.
I want to bring Michael McKee back into the conversation. Mike, I want to go back to that first message from the president this morning and the message on Truth Social. On top of everything, he is central casting and he will never let you down. The never let you down part, is it possible for a Fed chair to do his or her job without letting down the president?
Probably not, because the incentives are different for the two of them. The Fed chair is supposed to be looking out for the economy, and the president's going to be looking out for the president, no matter who the president is. But does it have to be a major clash? A lot of that depends on what happens and the externalities that come in that you can't predict.
It only took a year for the president's first nominee in the first, when he passed over Warsh in his first term to go to Powell. And then after a year, they really
they were still at that point trying to figure out how to get out of the zero bound range because they'd been in it for so many years and nothing was happening, and they started to raise rates, and the president didn't like that because he didn't like higher interest rates, and then the Fed stopped because of the little temper tantrum that the market side had, and then it was fine again for a while, and now we've got rates not as low as the president wants, so he gets mad. But that's going to happen. It's happened throughout history with presidents and Fed chairs, and they just have to basically take it like Jay Powell has, but still do what needs to be done.
Bottom line, what will be the role of Jay Powell if he stays on as a governor? As we said, Kevin Warsh passed over in 2017. Do you think it's going to be comfortable? Jay will say what he wants to say? I'm just curious, the dynamic.
It's going to be very interesting because this is not an ordinary governor. This is the guy who was the chair that everybody respected and looked towards. So if he stays on, it's going to be difficult because if he dissents or if he objects to something that is being done in monetary policy, it's going to carry a lot of weight in the markets, and it's going to a certain extent, undermine Warsh. So the question is, does Powell want to be in a position that he might have to do that? He's got to figure out if Warsh is going to be good enough for the Fed that he could escape. But the other thing is this investigation has to end, and the timing has to be right. So it doesn't look like they're buying off Powell and Powell is being bribed to leave. So the sooner they get rid of the investigation, the better if they want Powell out. But I can't believe that the president would do anything that would keep Powell in his seat longer, especially if they can't get Warsh confirmed and can't get him put in there, because then that would be the president's fault, and he's got Jay Powell, who he hates, still there because he didn't act.
Oh my God, it's like a reality show to some extent, the Fed reality show. Michael McKee, thank you so much. Really appreciate it. Mike's going to be having an interview with Stephen Myron of the Fed a little bit later on at 3 p.m. Wall Street time, so be sure to check that out. We will be carrying that. Katy Kaminski is still with us. Katy, I do think about something California Governor Gavin Newsom told our Brad Stone, and obviously a Democrat. He's a vocal opponent or critic, if you will, to the president, not shy about stressing his opinion. Having said that, he made a point that there's no rule of law in this administration. Again, Gavin Newsom's opinion. But he said the markets kind of keep the president on the straight and narrow. So I'm just curious if you think that's what the bond market believes, that we will have an independent Fed, that it's going to be very careful because the president understands the importance of financial markets.
I mean, I would definitely say that today's confirmation shows a little bit of that, or at least this particular nomination, because a lot of people were expecting the extreme scenario, a big shift in general direction. And I think that's where, the market must be playing some role of that, because the bond market is one of the few places that's harder for the president to control. And really, if we lose the bond market and things get challenging, it can be very difficult.
Was that at risk of happening in this process at all?
I mean, I think we have seen yields going a little bit higher recently. I don't know if that's a more pro-growth story or whether or not at some point we might be concerned about, vulnerability of U.S. bonds. But I do think it's always a risk in this scenario where the Fed has been, so conflicted, and also where it's really unclear where that's going. So I think we're watching it. It hasn't moved out of range, but you definitely see indications.
Just 30 seconds, Katy. I mean, it is kind of confusing. The dollar trade, as you said, metals, gold, silver have been on a tear. They're dropping back. Even just looking, and I realize it's the end of the month, but even the equity trade, we saw some buying over the last half hour. It doesn't feel like narratives and trends are yet quite forming or quite formed yet.
Yeah, I'd say, today's not over yet. And yesterday was also a weird day like this where you had copper moving massively as well. I think just the level of volatility that you're seeing in some of these commodity assets is concerning. And it's something that indicates that we're in a very different regime this year than we have been in recent months. And I think we'll have to see sort of if this is the top or if we're going to continue to see this type of volatility around commodities going forward.
It's bottom line really interesting, to say the least. Hey, Katy, thank you so much. Stay warm. Have a good weekend. Katy Kaminski, she's Chief Research Strategist Portfolio Manager at AlphaSimplex Group. We're going to stay on the markets for you. Yeah,
let's specifically talk about what's going on with gold and silver. They suffered their biggest slide in years. Gold having its worst day at one point going back to 1980, a whipsaw reversal of a scorching rally that lifted prices to all-time highs. Silver plunging 20% in its biggest intraday decline going back to 2008. Spot gold falling 10%, its biggest drop in decades. Carol, it was triggered by the dollar rebounding after the report that the Trump administration was preparing to nominate Kevin Warsh for Fed chair, now confirmed.
Yeah, so this is certainly a play. We just talked about this, certainly with Katy laying that out for us. Hoping to get some thoughts on all of this with our next guest. Jan VanEck is with us. He's Chief Executive Officer of VanEck Funds. They've got about $161 billion in assets under management. Joining us once again in studio. Hello.
Good to see you.
Great to see you. Interesting. Gold funds. Gold and silver, the move that we're seeing today. Gold funds. It's in your DNA, has been for decades. What do you make of kind of the trade that we're seeing here? Is it just all about what we're seeing in the dollar trade coming off of the Fed announcement?
Yeah, in the short term, I say this is the hardest bull market to trade, the gold bull market. So in 2023, we started pounding the table to buy gold. No one wanted to listen, right? Because gold has sort of had a horrible decade after the financial crisis.
Right.
And now it's run up so much, and people were our clients were like, I missed it, right? And then you had this technical blow off, and it's going to correct. Right, we think it could correct to 3,800, which would be the 200 moving average day support. It's down 15% now. I think it's in a multi-year bull market. Don't focus on all the short term, but people are going to get psyched out. And when it does correct to 3,800, no one's going to be talking about gold, and it's going to be impossible to convince them to buy. But the deep fundamentals are still there. And what are they? They are that the United States has a fiscal spending problem. We've talked about that before. We don't need to get into the details. We've got unpredictability on tariff policies and a bunch of foreign policy, maybe even military action in the Mideast, right? All that's happening. And we've weaponized our financial system, or we've weaponized the dollar, right? When we took Russia's reserves during the Ukraine invasion. So people want gold, something they can hold. Countries want that. And the developed markets who are getting richer year after year, month after month, are buying more gold. So that's why we see this a long ways to go.
Why is gold the right asset to hold in an environment like that, as you describe?
Well, countries want it because if they put it in their vaults, and it doesn't matter what the current U.S. president thinks about them, it's untouchable. And it's also, 100 years ago, the world financial system centered around gold. And my argument is the world economy is becoming diverse just like it was 100 years ago. I like to talk about the rise of India a lot. It's going to be as important in the next 10 years as the rise of China.
Signing a big trade agreement.
Right, with Europe. And they're not dollarized economies. So what are they going to buy? Gold is the world's leading currency. It's a paradigm shift.
So is the era of the U.S. dollar over?
It's the dollar plus gold. And, again, if you're looking at India, you're looking at China, they don't want a dollarized economy, right? And what's their second best?
China would not like it either. And they've been trying, right, to get their own currency be much more of a global currency. But it's been...
I don't think anyone's going to win as the next global currency. I think it's going to be gold by default.
Interesting. Tell me about the flows that you've seen in your gold funds. And then we want to expand out to some of your other funds. Is this money been flowing in like crazy?
So that's part of my thesis. Not a lot in context. So last year, there was very little gold buying in the U.S. The gold was going straight up, basically.
Yeah.
Very little gold buying until the second half of the year. There's been a ton of bullion buying in the last month or so. In our gold shares fund, no one talks about gold shares. There were net redemptions last year, about $4 billion. Wow. And we just got inflows yesterday, but in the ETF world, sometimes you get inflows when people want to short it. And I think that was a very smart investor worried about the sell-off.
Well, let's transition a little bit.
Yeah.
Gold is certainly of interest to us, but energy is also of interest to us. I was actually thinking about this earlier today, not just the fact that we talk about energy demand when it comes to AI and data centers, but also just the cold weather that we've been seeing. And you've seen commodities rally as a result of some of that. When it comes to AI, when it comes to the trade related to AI, you're very bullish on uranium. You're very bullish on other ways to power the U.S. moving forward. Where are you seeing those flows and why?
Right. Well, we've got two things going on. We've got this multi-year shortage of electricity in the United States driven by AI data center demand. So everyone who's moving towards that electricity trade is getting rewarded in their equity prices. And then on top of that, we had some news out of China, maybe it's not real, that they may do some stuff to alleviate their housing problem. If they do that, right, and they call it Dr. Copper. That's the next metal I would focus on, Tim. And Dr. Copper is like a sign of the health of the economic growth. And I mean, copper has also had a little bit of a crazy run up, but I think the fundamentals are what you talked about. The new world of AI, electrification, needs the old world. It needs natural gas, it needs gas turbines, it needs construction, all that kind of old world stuff. And if you get China even showing some signs of life, you've got a good economy and good demand for the old world.
It's interesting, though. I thought about that move with China, like to prop up housing, and that can be helpful. But it just, to me, also points to the troubles that they continue to have in their economy, right, domestically. But you think that these are fixes that lead to a better domestic economy in China, or what?
Well, I think China's been saying, I want to lead in all the technology areas, and I don't really care about housing. Right? I mean, effectively, and if the private developers go bankrupt, so what? I think that's a reasonable policy, I guess. But I mean, I think if they're kind of sick of it and they need their consumer to get going, I mean, Trump is going to meet with Xi in April. And I think part of the narrative has got to be China's got to do something to boost their domestic consumption. But that's Jan's entirely out of the blue guess as to the narrative that might be appearing.
I just feel like we've been talking about that for a long time, and they've been doing different things. And I understand their frustration, but
tweaking,
yeah. Not enough, right?
Not enough.
Small.
Hey, Jan, before we let you go, we got to have you weigh in on Kevin Warsh and the president's pick. Again, he's the nominee. He's not yet Fed chair. Your view there? Scott
Bessent landed the plane cleanly. Right? They determined about 6 to 9 months ago they wanted a less aggressive Fed. They wanted fewer economists, a smaller building, and a smaller balance sheet. They figured out that policy change. He articulated it really clearly. He wrote articles. Scott Bessent did. So they basically picked a very competent nominee. They had 4 competent choices, and they picked one. And if you looked at the financial markets today, and I told you which day this week was the Fed governor nominated, you would have no idea, right? He's landed the plane perfectly.
Independent Fed?
Totally.
No worries.
I'm worried about over fiscal spending in the United States. That's where we lose confidence in the global markets, and that will weaken the dollar again and cause gold to continue to rally.
Well, you were the perfect guest to have. We were like, oh my gosh, how did we? Jan, take care. Thank you so much. Jan VanEck. He is Chief Executive Officer of VanEck Funds, joining us right here in studio. Carol Massar, along with Tim Stenovec, live here at Bloomberg headquarters in New York City. All right, Tim, record quarter.
Check.
A rebound in China.
Check.
Better than anticipated forecast for the current period.
Check.
And strong demand for the new iPhone 17 and growth in services.
So why is that not enough to move Apple stock higher today?
It's a great question.
Dan Ives was asking that question earlier today, too.
And we did see initially a rally in Apple in the aftermarket, but then we saw it kind of pull back. Sounds good, but maybe not enough. Let's see. I'm guessing this doesn't necessarily come as a surprise to our Bloomberg News managing editor for global consumer tech. He is Mark Gurman. He joins us from the Bloomberg LA News Bureau. I feel like you called it. I think strong quarter, you thought that would happen, gives Tim Cook some breathing room, if you will, but there's still worries, whether it's component costs, whether it's impact on margins, whether it's, there's other things that people are thinking about. What's Apple in the future?
Yeah, I think people want to know, what have you done for me? Not what have you done for me lately, but what are you doing for me right now? They had just an incredible quarter, and they're going to have another incredible quarter. But Apple as a stock is just simply not as exciting as Google at this point, or Meta, or some of these other tech companies in terms of long-term investments for hypergrowth. This is a well-oiled machine. that is churning out new products on an annual basis that I guess other than the new iPhones last year are, for all intents and purposes, minor iterations. The AI story, it's calmed down a bit, but it's still as bad as it's ever been, other than that Gemini deal, which Tim Cook calls a collaboration. And so if you think over the long term, it's just not that exciting of a company because the AI has been such a failure. Like I've said, Apple hiring John Giannandrea as its AI chief in 2018 could go down as the biggest mistake in Tim Cook's tenure, because they completely missed the boat on generative AI, which means anything around AI hardware has been delayed, anything around chatbots or AI software has been delayed. They're years behind the competition because they started years after everyone else. The AI story is so poor there that they have their in-house models people continuing to leave in droves. You had to partner with Google, which obviously was the right thing to do, as embarrassing as it is. And so they're churning out, they're meeting expectations, exceeding expectations, but it doesn't matter because the future right now is a little bleak. Will they turn it around? Probably, but they need to show something.
Mark, somebody would push back perhaps and say, well, Apple's not usually first to stuff, but they're the best at doing things. They didn't have the first music player, but the iPod was the best. They didn't have the first tablet or smartphone, but the iPhone and iPad were and are the best in the category. Could that happen with AI? Yeah, go.
No, first of all, no, but okay. That was 20 years ago, right? The iPod was 2001. The iPad was 2010. The iPhone was 2007. The Apple Watch was 2015. The AirPods were 2016. It's been 10 years. There's been nothing. I mean, I have this, showed this before, this Vision Pro, but I use it once a month, $3,500. Doesn't do anything for me. Doesn't do anything for most people who have it. Most people have it in their drawer, not on a desk. There hasn't been a revolutionary, compelling, new, game-changing product from Apple to drive growth in many years. And I don't...
All right, we're talking with Mark Gurman. He can't freeze. This was too good a conversation.
Was
Mark
Tim Cook
Gurman
in control of that Zoom feed?
Yeah, exactly.
What happened there?
Wait, exactly. He's got to come back to us. He's obviously covering Apple there. All right, we'll see if we can get Mark back. Mark Gurman, managing editor for Global Consumer Tech there out on the West Coast. We're going to head to the West Coast again, but to a city north of where Mark was.
And talk Tesla, because I want to bring in Ed Ludlow. He's a Bloomberg TV co-host of Bloomberg Tech. He reported out this story with Bloomberg's Dinesh Nair, Lauren Grush, and Kyle Porter. What we're talking about is Bloomberg exclusively reporting that SpaceX is considering a potential merger with Tesla, as well as an alternative combination with AI firm xAI. That's according to people familiar with the matter. It's a sign that Elon Musk is weighing how to consolidate his empire. Is this all about reaching that market cap milestone so Elon Musk gets that huge payday, Ed? Is that the cynical way of looking at this?
A lot of people have hypothesized that's what it is. I mean, what I've reported, what we know from sources very close to this, is that there is an element of structure here. In a more boring sense, on the engineering side, deeper vertical integration between a number of companies that are kind of already work together. But, I had it put to me pretty plainly that, like Elon Musk would become, of course, the single largest shareholder of a very large entity. Also in the story, though, is again, citing sources, there's going to have to be some kind of structure to a deal. So these are two distinct things, right? Private SpaceX merging and combining with public Tesla. Separately, the idea of private SpaceX combining with private xAI. In both cases, we are told there's an element of financing that needs to go on here. And, certainly sovereign wealth money from the Gulf could play a part in that.
Ed, an incredible exclusive by you and Dinesh Nair, Lauren Grush, and Kyle Porter. Why is this happening now? Why now?
Yeah, I don't know that it is just happening now. I mean, One thing I would say, this idea of Tesla and SpaceX combining has been hypothesized by people in the public domain, specifically Bill Ackman and Chamath Palihapitiya, And they have argued on social media why they think that that's the case. The new bit, what we're reporting is that these talks are taking place between the parties, between the companies. And, I think those talks have been ongoing a little while, actually. Why is it happening now? Well, the quite obvious question is, hold on, didn't you guys report that SpaceX is going to do a big IPO in the middle of this year? We did, yeah. So there is some unanswered things, for example, the chronology of events in either scenario taking place.
Yeah, it really complicates things a little bit in terms of at least the structural future of these companies. Is there an actual business case to be made here? Well,
also don't forget, just this week, one of the pieces of news that we did on the show, guys, right, was that Tesla has made an equity investment in XAI. It was disclosed this Wednesday. It's a $2 billion investment. And, we broke that story last summer that SpaceX had already made an investment in XAI as well. So there's financial linkage between these already. But it's just a well-documented thing that, like, there are engineers that working at Tesla that have also worked on SpaceX projects. XAI is a big buyer of Tesla's energy storage products. But really, what we're trying to get to Tim's original question, which is this the future where we have this kind of conglomerate underneath Elon Musk that kind of all pulls together for a shared common cause?
Ed, the week that was, it was a crazy week, to say the least. You know it. You guys did the show on Bloomberg Tech leading up to the earnings, and then you were here with us. Long days. On this Friday, look back, your takeaway on what we saw.
Yeah, it's interesting because, like, a lot of the things that we discussed in advance came true. And then I heard you talking to Mark about Apple. I was trying to give such a powerful response that I too could break the internet and freeze, and just like our structure couldn't deal with it.
Happens.
I couldn't deal with that. Memory right now is a big thing. For Apple, it was a big thing. We said it would come up, and it did. And they managed it in the quarter gone, and they said it will impact margins in the quarter to come. We expected that. We said that Microsoft would live and die by the balance of its capital expenditures against very high expectations for Azure growth, and it didn't meet those expectations of Azure growth, and look at the difficult week it's had. So that was kind of interesting. At least the market's consistent in that sense.
Mark, we want to bring Mark Gurman back because we got his connection back. Mark Gurman, come on back in here, because when your feed auspiciously froze as you were weighing in on your views of Apple, we kind of lost you at the time where you were talking about it has really been a decade since anything truly groundbreaking has come from the company. I want you to be able to finish your thought.
Yeah, I think Apple didn't like what I was saying, so they cut the power. So to the interwebs, they control everything. Well, they've got a ton of stuff in the pipeline, a lot of stuff in the pipeline. And I think rather than one major thing, the revenue story is going to be a mix of several accessories and smaller items. They've already hit the big ones, right? They've already hit the computer. They've already hit the phone. They've already hit the iPad, you name it. So there's not a lot of additional product categories of that stature and that potential size out there. So it's about adding up a bunch of additional stuff that work with the existing ecosystem. So financially, they'll be okay, but they need some AI.
I just want to throw one thing at you. Wall Street, Benzinga Newswire noting analysts have varying opinions on Apple's future, some maintaining outperformer buy ratings, others maintaining neutral or hold mark. One analyst, Laura Martin, well known to the Bloomberg audience, we all know her, she believes Apple's decision to partner with Alphabet to build its AI foundation model is, quote, selling its soul to the devil and may limit Apple's AI growth. We talked about this yesterday. You agree? Is she right?
Not really.
Okay.
They had no choice. And if they continued going in-house on their AI model development, they would be completely in the toilet. It would take them another 3-4 years to get things moving in the right direction. So sure, maybe they sold themselves to the devil. I don't necessarily consider Google the devil, but they needed to do it. They had no choice. And also customers just don't care. They don't care that Google is powering their features. They just want them to work. Yeah. You ask 100 people on Hollywood Boulevard who powers Siri, maybe they won't even know what Siri is. So they just know they can talk to their phone.
I know you're just worried Google might be listening, right? We might lose your feed again.
We'll let them go before that happens. Mark Gurman, managing editor for global consumer tech for Bloomberg News, joining us out there from Los Angeles.
Ed Ludlow is still with us, who has had a busy week like Mark. Ed, just looking ahead to next week, we get some other big cap tech names, some other Mag 7. Just quickly, what you're watching out for.
Yeah, it's a very similar story with Amazon and with Alphabet, right? Like that's what it is. Capital expenditures and then showing revenue growth that directly ties to AI. Like this is real AI revenue. And, Amazon gives a run rate number, billions of AI revenue. It's the same thing. But of course, the stakes are now high because the market knows what Microsoft did. And so that's how it will go.
Good stuff. And we know we'll be talking to you throughout the week. Ed, thank you so much. Hopefully you get some rest this weekend. Ed Ludlow, Bloomberg TV, co-host of Bloomberg Tech.
Hey, let's send things back over to Charlie. He's standing by in the Bloomberg Businessweek studio for a business flash. Hey, Charlie.
Hi, thank you very much. Two stocks you guys just talking about. Apple unchanged right now. Alphabet, it reports next week down 0.2%. The Dow, the S&P, NASDAQ, all in the red right now. President Trump goes with Kevin Warsh at the Fed. S&P right now down 0.4%. Dow Industrials down 0.5. NASDAQ Composite Index down 0.9. And the Russell 2000 Index of small cap shares down by 1.3%. 10-year at 4.23%. Let's talk gold. What a move there. 4,900 even right now. Yesterday we were telling you about spot gold at 5,500. Gold today down 8.9%. Silver is plunging 27%. 84.41 right now for an ounce of silver. West Texas Intermediate crude oil higher by 0.1%. 65.49 a barrel. Coming up 3 o'clock Wall Street time. We'll be sitting down with Fed Governor Stephen Myron. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Aon reported earnings this morning. EPS and adjusted operating margin beats. Top-line revenue is a little bit below expectations. Stock has been up about 2% intraday at its high today. Stock slightly lower year-to-date, and it's slightly lower in 2025. We've got a great guest to talk about the company's business, the outlook. We welcome back Edmund Reese. He's Executive VP, CFO of the nearly $75 billion market cap insurance brokerage company. We're talking, of course, about Aon. He joins us once again in studio. Nice to have you back. How are you?
Thank you for having me, Carol, Tim.
Nice to have you.
Very good.
So tell us, before we get into the quarter and talk about the business specifically, we keep asking leaders what it's like to be a member of the C-suite in this environment.
Well, I mean, this is for us and for our clients, it's a very volatile and uncertain environment. There's a ton of news today that may bring some stability to it, but for us, it's requiring more of our services and demand from our clients. There's a lot going on, and we have solutions that can help our clients protect their businesses and grow their businesses. So there's a lot going on. It's an exciting time to be in my seat sitting with Aon.
Do you ever lie there at night before you go to sleep and say to yourself, I really hope I don't wake up to a social media post from the president about the insurance industry?
Well, look, I think we all have the same objectives here, and that's really to help this economy be able to move, and we provide solutions to help the clients with that. So volatility, actually, for us in many cases, is a positive thing because we think we have data and insights and solutions that can help companies move like that. So when there's a post like that, it actually means more demand for our services.
Okay. That's what I want to ask you, though. You mentioned volatility that your clients are dealing with. What are the biggest, aspects of volatility that they keep mentioning to you? What are the risks that they are most worried about in today's environment?
When I last came onto this show, I used this term, the megatrends. And I'd categorize what our clients are talking about right now in those same categories. You're going to be familiar with them. When we think about technology, they're talking about data center builds and digital infrastructure. And that is a demand-supply issue today.
Is that a number one?
That's one of the top items right now in terms of growth. We had great results that we can get into. That was one of the drivers of growth. They're talking about trade. I just saw a headline on your newscast here that talked about a $400 million tariff-based revenue hit. They want to know how to manage their supply chains and diversify those things. They're talking about the AI impact on workforce. As a result, they're talking about the storm here in New York, weather, the 4 megatrends. So those trends, I think, are still top of mind. They might change each time that I come onto this show, but they're still top of mind for our clients, and that's where we're helping them.
What happens to your business, though, if the AI trend unwinds, if the AI trade unwinds, if we don't see the productivity and we don't necessarily see the value that is promised with AI.
I think we have a long runway before we start to see. Right now, the fact that companies are investing in AI, they're really starting to reevaluate, as an example, their workforces. What is the job architecture going to be? What's the pay structure going to be? What's the benefits going to be? We have data and analytics. We have a database, Radford McLaughlin, that many of your viewers here would be familiar with over 30 million employees in it. So we know that companies are investing because we see jobs with this description and it up 2,000% over the past couple of years. And we can help companies think about this workforce transition. We can help them think about how to upskill and reskill their employees so they can work alongside with AI. So it might change, but we know that the investment is large. We know that this is a long journey ahead before we start to see a shift. There's a lot of work and insight that we can give clients right now on it.
Let's talk about earnings. And unfortunately, as you know, we in the business media and journalism like to know about the outlook. Yeah. You did give an outlook, and I am curious how much in terms of data centers, because you do talk about that a lot with us, how much of that is a tailwind in your guidance for 2026? I mean, should AI investment unwind rapidly, would that be meaningful to your top line expectations for 2026?
Yeah. We have a broad-based business. We're operating in 120 countries right now. We have broad solutions across commercial risk, across reinsurance, health, and wealth. The data center, the AI, the technology is a component of it. The guidance that we gave was for mid-single digit or greater growth, mid-single digit or greater growth. And by the way, we're going into the third year of our 3-year plan. We set 3-year plans here. And that will be a component of it. But look,
so you're not overly exposed.
I'm not
in
overly
any
exposed
way.
to
It's
that.
Not like it's a quarter of the business.
In fact, we think it's probably a tailwind that further supports the mid-single digit growth that is not baked in at extreme amounts at the moment as we think about the guidance.
Oh, interesting.
You know, I ran into a colleague who I haven't seen in a bit of time today, and we were talking, and I was just like, we both agreed, I can't believe January has been like this already. You know, things were kind of slow in the first few days of the new year, and then you had everything happening in Venezuela. We have everything happening at Davos. We have this, quote, armada on its way to Iran, Greenland, everything there. Given what has happened in recent weeks, are you seeing clients looking to expand protection for things like trade credit, contingent business interruption, war, terrorism, those things?
I'd add to it political insurance, cyber. So yes, risk is increasing. And in fact, one of the things that you showed the slide of our company, but the industry in particular, one of the things is that maybe pricing has been coming down in recent times. And clients are seeing that as an opportunity to increase their limits across the categories that you just talked about. They're seeing it as an opportunity to increase coverage. Do I have enough cyber? They're seeing it as an opportunity to expand across their overall portfolio and have better protection to grow their business. And that it has been the driver of the growth that we've seen over the first 2 years of our plan, and why we're so confident in our outlook going into 2026 as well.
One of the things I wanted to ask you, we've only got about a minute or so left here. You guys put out a review, and you talked about the LA fires. And it was overall global economic losses stemming from disasters, including thunderstorms and earthquakes, totaled about $260 billion. And I think there was global insured losses of more than $127 billion from natural disasters, dominated by more than $100 billion occurring in the U.S. after the LA fires. How do you continue to address global climate change? I mean, we have done a story here at Bloomberg about so many people who haven't been able to rebuild because there's fights between the insurers and I think utilities or the city. Like, who is responsible for those costs? Meanwhile, people don't have homes. Forgive me, I'm only saving about 45 seconds. How do you guys address this?
That is one of the 4 mega trends that I just talked about, weather. To the point that you just made, it has been at record highs. 25 was kind of flat, but you just said 127 billion, so it's been growing at record highs. California wildfires, maybe 40 billion itself. The storm that we're facing here, is now projected to be $1 billion, so not as much as some of the disasters that you just talked about. But the way that we help companies and clients work with it, deal with this, is not just coverage. It's about building resiliency. In California wildfires and some of those places,
so preparing
that's
for
it. It's about preparing for it, and we have the expertise, the engineering, the insight, and analytics to be able to help you take the actions to help you become more resilient and prepare for that.
So glad we could get you in before January was over. Thank you. Edmund Reese over at Aon. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're getting ready. Close to the last hour of trading on this Friday. Carol Massar, Tim Stenovec, and we are here at Bloomberg headquarters in New York City. Having said that, bouncing around on the equity trade, S&P 500 just down about 0.4%. We're well off our worst levels of the session. Dow down about 210 points, down about 0.4% as well. NASDAQ 100, that index, of course, comprised of so many big tech names. It's down about 1.2%, down 300 points. But again, all of them off their worst levels of the session. I want to say about, a half an hour before we came on air, about 1:30-ish, we saw stocks kick to the upside. I have no idea if it's
might need to
end of the month rebalancing. I don't even know if that, I don't know. It just was interesting to see the trade.
Might need to adjust a few movers for later as a result of the buying that we're seeing.
Might have been maybe some of the stuff maybe the president was saying on Iran. We're going to talk about the oil trade a little bit later on.
Ellen Wald is going to be joining us in the 3 o'clock hour.
All right, everybody. Looking forward to that. I'm Carol Massar, along with Tim Stenovec. Let's get to some stocks on the move. Norah Mulinda is in the house, joining us with some of the names on the move. She, of course, following the markets over at the Bloomberg TV side, but she also joins everybody whenever we want her to, and when she wants us to.
Always.
Good to have you here. What are you watching?
So, talking about some stocks that have been flipping around, I'm looking at shares of Apple. Ticker AAPL.
This is what I was talking about.
An earlier decliner.
This was my first decliner, but now I'm going to have to change it
now
to
you have to scrap it.
I am not making it a gainer. It's only up 1/10.
Yeah, but look at how much it was down earlier.
I know, but still.
Earlier down as much as 2.4%. Now we're seeing the stock up as around 0.2%.
Yeah.
Right?
It's a little bit of a swing, almost, not quite 3%, right? But
right.
It's a good swing.
Interesting action that we're seeing here in the trade. But earlier, what we were really looking at is the fact that the company reported its largest first quarter sales growth in over 4 years. So you saw the street really trying to digest what this means against the fact that the company was warning that rising component costs could potentially squeeze margins. So that's why you were really seeing the stock moving toward the downside. In particular, the company said that it expects more of an impact to gross margins due to rising memory prices. So that's what you saw a lot of people zeroing in on earlier. But I mean, of course, we are seeing this sales growth, so maybe that's what's kind of tilting people to the upside as we are sitting here in the afternoon, seeing it trying to inch closer into the green right now, as you were saying, Carol.
Are you going to hold on to it?
What are we doing? Is it going to stay as a decliner? What are we?
It all depends on what Apple does by the end of the day. But KLA Corp is also a big decliner today, so we'll check that one out. Actually, related to Apple today is your next stock that's moving today.
Absolutely,
and that's certainly what you had to say about memory prices going up.
Yeah, SanDisk shares are on a tear.
Obsessed with.
I'm just looking at the action here. Yes. Insane. I mean, the stock is hitting a record high. This is ticker SNDK. We did see it pairing some of its gains, but it earlier surged as much as 25%. Now take a look on a year-to-date basis at the S&P 500, and you'll see that this is a stock that is the number one best performing stock by a percentage basis in the S&P 500. It's holding on to that number one slot here. But we saw that revenue and the outlook beat expectations here for the stock. But the stock also surged more than 1,600%. That's 1,600% since it IPO'd last year. So it's really been on a tear. We're certainly seeing the stock, really Wall Street rallying behind it, seeing a lot of optimism.
These are the companies that weren't initially the ones we were talking about in terms of AI connections and so forth, but it's definitely this one, Western Digital, we've really seen some moves to the upside. This is an interesting one. Go to Verizon.
Verizon, ticker VZ. Now this stock, it did see its biggest gain in mobile phone subscribers since 2019. I'm looking at the action right now. Shares up about 11% as we speak. The company said that it's planning a buyback of as much as $25 billion in shares. So the stock earlier surging for its best day since 2008. Shares rising as much as 12% on the day. This is the second best performing stock in the S&P 500. So Street clearly liking this news.
I heard Paul Sweeney this morning on Surveillance
What
on
did he
radio.
say?
He said he's been a Verizon, I think, customer forever. I am a visible customer.
I knew you were looking at your phone to figure out.
I couldn't remember the name.
which service.
We've been bouncing around a little
Let's
bit.
just
I
say,
missed this one, clearly.
well, Carol, as you'll find out at some point, is not loyal to her wireless network, which increasingly
okay.
It's a
is the
commodity,
case,
right?
Exactly,
Or
and that is
utility, or
why,
whatever you wanna call it.
why it's such a big deal when
Yeah.
a company, an established company, adds so many. But whose network do they use? Because
I don't know.
that's how these virtual mobile network operators work.
Like whatever works for you.
So they'll take, the Ryan
Yeah.
Reynolds and the Scott Galloway, their networks which they have,
Yeah.
will lease spectrum
See, it sounds like
from
he
these
does some work on this.
from these
he
companies.
knows a lot here.
So even though they're saying we're competitors to them, they actually still end up paying them.
What's interesting, this is one is kind of no frills. Like, I don't think you can get anybody on the phone if you have a problem. Like, it's all email based. But
And do they even respond there?
I don't know. I haven't had a problem. Listening.
Fingers crossed.
It's also not your department, right?
Yeah.
There's a division of labor.
It's my husband's department.
There's a division of labor. I think
definitely
I can say that. We all have our own things.
You know how this works.
Hey, yes.
Right, we all know how this works.
We all
Even
do.
on a news team, right? Everybody's got their little responsibilities. Norah Mulinda, thank you so much. Her responsibilities are certainly keeping us up to date on stocks moving in the markets. Check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers in the market. Find it on Apple, Spotify, or anywhere you get your podcast.